Hello and welcome to Simplicity in Stocks. Pharma stocks have remained steady in the recent market correction. These stocks have remained resilient among the West Asia conflict due to their defensive nature in the market, steady demand for medicines, and the global revenue diversification of these companies. Though not immune to corrections, pharma stocks have outperformed cyclical stocks in these uncertain market conditions. The Nifty Pharma Index was at 22,632 points on 1st January 2026 and is almost flat this year. The Nifty 50 during the same period has lost about 10%. Here are four pharma stocks to watch in 2026 amid the market volatility. This selection was based on promoter holdings greater than 50%, return on equity ROE of more than 14%, and a track record of consistent profitability. Please note this video is for information purposes only. It's not a stock recommendation and should not be treated as such. There is no opinion or view on any stock covered here. Torrent Pharmaceuticals. Torrent Pharmaceuticals is the flagship company of the Torrent Group. After the JB Pharma acquisition, it is ranked 5th in the Indian pharmaceutical market and is among the top 5 in segments like cardiovascular, gastrointestinal, central nervous system, pain management, and cosmodermatology. Torrent Pharma has a consistent track record of dividends and profitability. The promoters hold 68.31% in the company. The return on equity ROE of the company was strong at 25.2%. The company recently announced the launch of its brand Symbolic and Semalix in India in both oral and injectable formulations. The launch expands the company's presence in metabolic disorders such as type 2 diabetes and obesity. Torrent Pharma has good prospects driven by its leadership in chronic therapies like cardiac and CNS, which ensure steady recurring demand. Acquisitions such as JB Chemicals are expected to enhance scale and domestic market share. Dwi Laboratories. Divi's Labs is a leading global manufacturer of active pharmaceutical ingredients (APIs), intermediates, and nutraceutical ingredients. The company supplies high-quality products to over 100 countries and is recognized as one of the top API manufacturers worldwide. The company has an ROE of 14.6%, while the promoter's stake in the company is 51.9%. Divi's Laboratories has good long-term prospects driven by rising global demand for APIs and custom synthesis, supported by a growing CDMO market expected to expand steadily through 2030. The company benefits from increasing outsourcing by global pharma firms, long-term supply contracts, and diversification beyond the US market. Zidus Life Sciences. Zidus Life Sciences, formerly known as Cadila Healthcare, has strong capabilities across formulations, APIs, animal healthcare, and wellness products. The promoters hold 75% stake in the company. The promoters hiked their stake to 75% in the December 2025 quarter from 74.98% in the December 2024 quarter. The ROE of Zidus Life Sciences is 19.3%. Zidus Life Sciences has good prospects driven by a mix of innovation, global expansion, and chronic therapy opportunities. Ajanta Pharma. Ajanta Pharma is a specialty pharmaceutical company focused on developing, manufacturing, and marketing medicines across more than 30 countries worldwide. The company has a strong emphasis on innovation, consumer needs, and delivering differentiated products using advanced technology. Ajanta Pharma's growth is driven by a robust research and development foundation with over 850 scientists. The promoters hold 66.25% stake in the company, while the ROE is good at 24.3%. Ajanta Pharma's future prospects are positive, driven by its strong positioning in branded generics, expanding presence in emerging markets, and a consistent pipeline of new product launches. The company is increasingly shifting towards chronic therapies which improve revenue visibility and long-term stability while enhancing the quality of earnings. Pharma stocks have long term potential due to rising healthcare demand, aging populations, and innovation in pharmaceutical sciences. However, the sector is highly sensitive to regulatory changes, patent expiries, and pricing pressures. Success requires careful study of fundamentals such as R&D pipeline strength, US FDA compliance track record, margin stability, and geographic diversification. Companies with consistent earnings, strong balance sheets, and strong product portfolios will likely outperform in the years ahead. While pharma can act as a defensive play during market volatility, investors must avoid overpaying for growth and be selective. Focus on quality businesses with sustainable competitive advantages. Evaluate the company's fundamentals, corporate governance, and valuations of the stock when conducting due diligence before making investment decisions. Happy investing.